Hi, and if you've joined us, welcome to Econothon. This is the World Bank Group's 24-hour broadcast from around the globe. We've been talking development economics nonstop, and we still have another 15 hours to go. I'm Srimati Sridhar, and I'll be with you for this next hour. Thanks for tuning in. And hey, we want to know who you are, so tweet a selfie of yourself watching us. Use the hashtag Econothon, and we'll give you a shout out. And now it's time for a quick time check around the world. It's now just after 8 p.m. here in Washington, D.C., around 2 a.m. in Paris, midnight in Accra, and 8 a.m. in Kuala Lumpur. And this is a quick look at what's coming up. So, did you know that at any one time the bank is involved in financing thousands of development projects around the world? But how can we tell if our actions are successful? How can we tell if we're making a difference? Measuring the impact of our work is incredibly important in our mission to end poverty. Ariana Legovini from our Development Impact Evaluation Unit joins us now to tell us more. Over to you, Ariana.
Thank you, Sri, and hello, everyone. I am joined here by Lupe Bedoya and Sveta Milusheva, both economists in our DIME team. The DIME team we established more than a decade ago to bridge the distance between development research and development practice. We have been growing ever since due to great demands from our partner governments and also from partner institutions and support from the UK and the EU, among others, who have bought into this very important idea. The idea being that data and evidence can complement the development process and actually support a transformation of the results that we can expect from our own investments. Now, this idea that seems logical was quite hard to sell in practice, and we had to demonstrate our own worth and value. The idea really is quite simple, that we can complement our development investments with a lot of innovative data and integrating those data, understand the problems that we face in a much greater level of granularity, and then experiment in the field with solutions that tell our clients what ways deliver better results. And working with those clients, we could actually transform the way development delivers for the final beneficiaries, all the people whose lives we're trying to save and improve over time. Now, the idea is not just what works. The idea is to work with every policy and interventions to make them work. And understanding how to make things work is actually more complicated and intense of an effort than just understanding what works. And so we invest with our clients in the long term to build their own capacity, their own understanding, building relationships and trust, and work with them over time to experiment in the field, different ways of doing things, complementary interventions, and really understand what ways of doing things can improve the results over time. In other words, we don't wait for projects to fail, but work iteratively and interactively over time to kind of go up the results scale. This is quite exciting. I don't think there's ever been a moment in our history where development research has been as exciting. And we see a lot of students coming to the bank and other places to do this kind of research and contribute to development very proactively. Now, I think one of the things that we do when we start working with governments is actually start from much smaller questions to build that relationships. For example, in Kenya, working with the Water Authority, we started off by thinking about their ability to collect revenues. And in so doing, increase their financial sustainability and also their interest in working with us. And then only then start moving on bigger questions, such as hygiene, to increase, to deliver health outcomes for Kenyan households. Of course, we're interested in solving big development issues, but we also have to really address the practicalities during implementation time. Big ideas sometimes fail to deliver, not because they are not good, but because the implementation fails. People don't participate, providers don't provide high quality services, and so forth and so on. And so we are really kind of in the engineering and the machinery of development, try to understand all the things that might go wrong and how we can contribute and help our clients evolve and develop better programs. Now, if you were to ask me or probably anybody in the DIME team, what we are most proud of is the sheer number of policy decisions that have been taken on the basis of our data and evidence. And those decisions have greatly contributed to changing the bottom line. Let me just give you a couple of examples, and then I'm going to ask Lupe and Sveta to talk a little more about that. Take the example of Ghana. In Ghana, we have experimented with incentives to farmers to plant trees. And through those incentives, we have triplicated the number of farmers willing to participate in these programs. By optimizing the incentives, we were able to increase effectiveness of that program by 68%. In Mozambique, our teams worked on irrigation systems to introduce monitoring of water usage and better conservation practices for water. And we're able to lower reported scarcity of water by half, thus averting the need to invest further in irrigation investments that are obviously very costly. And the examples go on, but I just wanted to point to the size of these effects. These are huge. And this is really how we justify the need for this type of research and development. Research that can contribute to increase the returns to underlying investment by large margins is not costly. It is something that pays for itself over and over again. And so I'd like to ask our guests, Lupe and Sveta, on their own experience in the field. Lupe has been working with our colleague Aidan for about 5 years, studying a very exciting poverty reduction program that targets ultra-poor women in one of the most challenging and fragile contexts in the world, in Afghanistan. Lupe, can you tell us a bit about your experience working in Afghanistan?
Thank you, Ariana, for the introduction. We are very excited for the work that we are doing in Afghanistan and for the results because they go to the heart of the challenge of reducing extreme poverty. One of the success stories of our generation is that poverty has been decreased by 2/3 or more than 2/3 in just 25 years, which is really transformational. The problem is that these gains haven't been reached everywhere the same, and many of the most vulnerable people, actually people who are living in fragile and conflict-affected areas, have seen poverty increase while the rest of the world improves. In Afghanistan, for instance, where we are working, in just 5 years, poverty increased from 38% to 55% between 2011 and 2016. This is despite big investments in the country that have come as development finance. So I'm going to tell you a little bit more about the program in a moment, but what makes this program special is that the impacts were very large and they were also persistent after the end of the program. We find that after 1 year that all activities were finished, consumption increased by 30% and poverty decreased by 20 percentage points. We have never seen something like this. Basically, 1 out of 4 households are out of poverty and many more are on the path out of poverty. So
can you tell us what makes this program different?
Yes, of course. Well, basically, this is the Targeting the Ultra Poor program, or TUP. And the idea is to give ultra poor women a big push to face multiple constraints that they have to actually get out of poverty by themselves. The program works in the following way. Basically, maybe more important than going to the program is understanding the constraints that these women face that help understand a little bit the intervention. 96% of women, ultra-poor women in Afghanistan are illiterate, 67% are depressed, and more than 50% of girls in school age don't go to school. This, together with the fact that access to markets are difficult or limited and they don't have access to financial capital, make very difficult or very unlikely that they are going to break the cycle of poverty without any additional help. So what the TUP program is doing is that they provide a productive asset, a cow, sheep, or goats, a consumption stipend, training, entrepreneurial training, frequent coaching sessions, and linkages to financial services, education, and health, with the idea that you need a comprehensive package, but for a limited time to get out of poverty or break the cycle of poverty. So very, very important is the fact that it is very comprehensive, but it's bounded in terms of time. It's 1 year and we go out, right? What we find after a year of the program is that basically all outcomes that we measure are improved: consumption, health, education, women's empowerment, financial inclusion. This is very different from most of the development programs that we do. Actually, if you study most of the cash transfers, impacts actually dissipate after the program has ended. So this is what one of the main things that makes this program special, is that we see that the results stay. Also, one of the elements of this program is that targeting ultra-poor women, we actually found out that the program is driven, the success of the program is driven by the increasing labor participation of women in a very complex labor markets for these ultra-poor women. Again, this is unique and make it unique, and the fact that the results again are persistent over time also adds to these to the elements that make this program special. One thing that was very surprising for us is that the increase in consumption was the largest amongst all the TUP programs that have been evaluated in more stable economies. So all in all, what we find is that these results prove that this concept of the TUP can be applied to fragile contexts, to reduce poverty, but also to increase women's empowerment. So hopefully it's evident now why the program is so special.
This is quite amazing. I think there are a couple of things that you said that are very striking. One is that we need a multi-sector approach, addressing all constraints to reduce poverty, and we can hope to have persistent results over time if we take a very intensive approach to poverty reduction. I think this is, from our experience, maybe a more generalizable result, that sometimes we do very light touch interventions that may not have the effects that are needed. In the economic growth agenda, I think the same argument can be applied. And maybe, Sveta, you can tell us a little more. Sveta is the head of our transport program, and maybe you can tell us a little more how we are thinking about the economics of transport and how these complementarities with other sector interventions may play out, and what we are doing to think about improving results and improving the returns of investments to transport.
Sure. Thank you so much, Ariana. So we find that the transport and infrastructure is critical for our clients, and 20% of multilateral investment is in the transport sector. And so we've seen a lot of interest and growing interest in studying and understanding what are all of the impacts of those investments. And for our team and for our program, we see this as an opportunity to study the economics around transport, and also seeing how policies from other sectors could align with the transport investments in order to maximize the investment and maximize the returns to this investment.
Can you give us some examples of that?
Of course. So, for example, with road safety, the WHO finds that 3% of GDP is lost due to road traffic crashes. So this is in terms of loss of life, injuries, as well as property damages. And so with road safety interventions, we could see very large increases in in growth. But the problem is that it's very difficult to actually evaluate the impact of these interventions. Currently, we have inadequate data, and finding the right econometric methods that allow us to evaluate the impact in a rigorous way is not easy. And so what the iConnect program has been working on is seeing how we can innovate in terms of both data and methods in order to evaluate the impact of these interventions.
So I'm sure everyone is quite interested in this idea of data innovations. There's a lot of buzz around it. Tell us a little more about the type of innovations that we are seeing in the road safety sector, for example.
Definitely. So one great example is in Kenya, where we've been using machine learning algorithms, and we've developed machine learning algorithms in order to crowdsource data from Twitter. So as people report on Twitter about crashes, we can scrape that data and then use natural language processing to identify the exact location of where these crashes are happening. And so we've actually been able to create a live map that updates as people report. And I presented this just this week to our stakeholders in Kenya, who are excited to, for the first time, see their data, which normally sits in these big stacks of paper, actually being represented and being able to see in a way that will allow them to have more targeted and more effective policies. In Malawi, we've been setting up a high-frequency data system for trauma cases. We've now collected more than 30,000 trauma case data in the last 10 months. And that data is being fed back into the health facilities so they can use this data to make more informed decisions. They now know the types of cases coming in, the timing, and they can use this in order to have better and more effective responses. So in using this type of data, we can have more effective and targeted policies that allow us to better invest the limited resources that we have, both financial and institutional.
I understand that a lot of projects are actually interested in scaling up some of these initiatives across different cities around the globe. And this could really contribute to our SDG measurement of road crashes and mortality. I guess the other issue that I'd like to talk about is the urban mobility issues. We have seen a lot of problems with poor populations in large African cities have poor access to the labor markets and other output markets. Can you tell us a bit what we are doing on urban mobility?
Definitely. So it's our urban mobility agenda is very exciting because not only are we looking at the impacts of the infrastructure. So in, for example, Dakar and in Dar es Salaam, we have new bus rapid transit systems, so bus systems that allow populations to move much faster through a city. So we're evaluating the global impacts of that, but then also we're doing field experiments to test different interventions that can be complementary and could actually leverage these investments and provide much larger results. And so, for example, we're looking at the impact on jobs for those construction workers that are building the investments. We're looking at women and accessibility to labor markets, as well as looking at populations and gentrification, and how we can make sure that those that most can benefit the most from these investments are able to.
That's great. How are the clients? How are you working with clients, and how are they reacting to your work?
Well, in Afghanistan, of course, everybody likes a good news story, and we are working with the government currently to scale up and to work in a research agenda to make the program more effective, actually.
I guess we are out of time for this session, but thank you very much for your, listening to us, and please follow us on Twitter or the DIME website. Thank you.
Wonderful. Well, hey, Ariana, thank you. What an exciting way to kick off the hour, talking about why it's important to measure the impact of the work we do in development. So with that, it is time to hear what you, the audience, have been saying online. All right, guys, welcome back. And I am joined here with our social media correspondent, Faher. Faher, thanks so much for joining us.
Hi, Shi. How are you?
Great, thank you. So, Faher, we are into hour 8 of Econothon. So tell me, what is the audience saying online?
Yeah, a lot of things. We're still very engaged with everyone. I do have a few things. Have you seen our shirt?
I have
That
not.
we
Please show
are,
me.
yeah. Look,
Wow, look at that.
right? Look at the back.
Development
nice.
never sleeps.
It doesn't. It really doesn't. So basically this, we have 20 winners. If you get engaged and keep commenting, we're going to pick 20 winners. We're announcing them tomorrow to give these shirts to. Also, if you're really intrigued, as much as we are, to watch our replays, go on our YouTube channel, World Bank corporate YouTube channel, and you can see some of the replays from earlier today. Or tomorrow, wait until tomorrow for the full one. Do we do a couple of shout outs?
Yes, I would love to hear. Where is our audience right now?
From Zambia, we have Malaka, who said, how can the new body of young entrepreneurs thrive in an environment where opportunities and access to finance are limited in an economy that's heavily taxed and corruption by government is unprecedented? And then a second comment was from Joe Chan, who said, what is the difference between economic growth and economic development? Thank you, Joe.
Yeah.
And that's it for us. Hashtag Econothon for the rest of the night, and stay tuned.
Yeah, and you know, there is a poll as well, I believe, right?
There is a poll,
Okay.
yeah. If you can look right there, there's a poll where you get to answer. We're asking what is the most challenging or the most pressing challenge in development.
Right.
So please answer that poll and stay tuned.
Wonderful. Well, thank you so much, Faher. And guys, keep engaging with us online. And with that, I have a question for you guys, and it's about taxes. How do we build the perfect taxation system? One that's fair, equitable, and effective. Now, many developing countries need to raise their tax revenues by at least 15% of GDP to be able to finance these basic services. But how do we do this? And to talk about this, I am delighted to be joined by my two guests for this next segment. I'm here with Gabriela Inchoste, who is a lead economist on poverty and equity here at the World Bank, and Oyebola Okonobe, who is a development economist here at the World Bank. Ladies, welcome. Thanks so much for being here.
Thank you for having us.
So let's get right into it. Taxes. It's one of the few things that we're all sure to participate in. So taking that into consideration, what do you see being some of the challenges in receiving and also utilizing taxes more efficiently? And Oyebola, I'd like to start with you.
Thank you. You know, that's a funny statement you made. That is one of the things we're sure of participating in.
Right.
Because that's true for us here in the US and most of the Western world. But go to Africa, go to Nigeria, go to India, go to Pakistan, it's not the case. You know, so across Africa, about 86% of people are completely outside the tax net. They don't pay taxes, and so for them, it's not this core part of life like we're used to. I think across Asian countries, it's about 68%. And so that in itself is one of the biggest challenges facing governments, is that what do you do when such large portions of your population are completely unreached by the tax net? And so the main challenges there that I see are this challenge of enforcement. If you don't have information on people's incomes because they're working at home or in informal establishments, how do you know what their income taxes should be? And so that's, I think, the biggest thing that governments are facing now. It's this challenge of getting enough information on their sales, their incomes, to be able to actually tax them properly. Something else I would see as a big challenge is facilitation. So I'm actually borrowing a bit from our colleagues in the global tax team. They've developed something called the Innovations in Tax Compliance, and they have it under 3 pillars. So first is enforcement, facilitation, and trust. And so facilitation is how do you make it convenient for people to pay taxes. In many low and middle income countries, the systems are manual. Actually, but to be fair, that's one of the areas in which most progress has been made, is kind of in moving on to electronic systems. And so, but that still remains a challenge, is how do you facilitate the process of actually paying the taxes? And the third one, which I personally think a lot about, is the trust. You know, so it's a big challenge in countries where citizens are not used to governments delivering to them. And so, I mean, many countries I go to, you ask, oh, but why aren't people paying taxes? It's like, oh, but what are we getting in return for it? You know, I talk to people in Nigeria, they say, I build my well, I, you know, have to provide security for my own house. There are all these government services that in many countries would be expected to be provided by the government, but if people are providing by themselves, then it's a challenge to actually raise money from those people. And so I would say that challenges along those dimensions of having information on the population to tax, providing the systems that will make it easy for them to pay, and creating a trusted system where people believe that the government is actually going to use these revenues well are just like key challenges that countries are facing now.
And it sounds like also even creating some sort of incentives, right, for people to take part in that. Gabriela, what do you think about this?
Yeah, I mean, I guess I agree with everything Oyebola mentioned. I would complement with the challenge of putting forward a system that on the one hand collects enough revenue and on the other hand does not disincentivize people from working or investing. So there's always this trade-off between how much can you tax without you know, providing bad incentives for people to stop doing the economic activity that they need to do in order to do better themselves, but also help the economy grow. So I think that there's this big trade-off there and a challenge. And I think on the how to spend efficiently, so how to use those taxes efficiently, there's also huge challenges there. Here at the World Bank, we put a lot of emphasis on evaluating and using evidence to inform which programs and projects should go forward. And so using evidence and using sort of our best analysis of which programs matter and which programs actually have a development impact is very important. And to the extent that governments are just you know, using last year's budget to project next year's spending, they're not doing that. So being a little bit more careful about what deserves public resources is important. And I think that that's an important part of building trust.
Right.
If people do not see where their taxes are going, they're going to be less willing to contribute to the system, and so on it goes as a problem.
Right, and you know, we've been talking about challenges, so let me bring this up. The perfect taxation system. Is it possible? How do we do it? I mean, what can we do? Do you guys think it's possible? Oyebola, what do you think?
You know, when you said that, I just, you know, to me it sounded really funny because I don't know any country that has a perfect tax system.
Right.
I don't think it's possible. I mean, there are things that come to mind about what characteristics that system would have. So for instance, as Gabriela started to mention, you want something that's efficient, so it minimizes the distortions that people make in their decisions of how to participate in the economy. You want something that, I think for many countries, you also want something that works on equity. You know, so many countries actually build in wanting to use the tax system to redistribute income. Right. And so you might tax the richest at the higher rates than the lower. And so that's a very attractive feature of a good tax system. Sure. I would also add strong tax systems would be ones that also try to correct externalities. So, you know, many countries, you would have like an excise tax on tobacco, so that if I'm a smoker and I don't care about the effect of my smoking on others or on the health system as a whole, if I'm paying more for it, then I'm internalizing that. And I will just say also that a perfect tax system would be one that is practical, that is enforceable. You know, it's no point having a textbook perfect, you know, equity and efficiency type of system if in reality you're not able to collect the taxes. And sometimes these things could be in tension. So my colleague Anne Brockmeyer and her colleagues have a paper that looks at how, you know, by the textbook, we should always, for instance, you should be more interested in taxing profits over taxing turnover. But if you're in a system or a country, they do this work in Pakistan, where it's just much harder to observe profits. It's easier to just observe turnover. Right. And so they show that in that system, then it probably makes more sense to be taxing the turnover instead. And so all these tensions that countries have to deal with constantly of these are the things that we're aiming for, but what are the trade-offs that we're going to make? And last thing I would say about what in my opinion would be a perfect tax system is one that promotes accountability. You know, so I think taxes are one of those ways, and there's some recent evidence on this, that when people are personally contributing to the tax purse, it could incentivize them to hold governments more accountable, to produce the kinds of, to deliver the things that citizens want. And so to me, even though you wouldn't probably find this in the typical textbook, I think that that's an important feature that taxes can play, is to create that relationship between citizens and government where people are more engaged in the political process, and hopefully that activates this virtuous cycle of governments then delivering to citizens.
How do you think we can do that? You know, I mean, how can someone, I guess, feel empowered to do that? What do you think it takes?
I mean, there's the different theories. One idea is just that if you are contributing, so these works more with taxes where people know they're paying. If it's a VAT where I just go to a store and I don't know that actually I'm paying, then maybe it might not work as well. But if it is something, so for instance, like a property tax, where every year I write that check, or I give that money over in the tax office or something, it could activate this sense of feeling that you're an investor, that you're paying into the system. And so if there were opportunities to demand things from the government or to make your voice heard, go to town hall meetings, things like that, perhaps that would encourage people to be more active in that sense.
Yeah, absolutely. Yeah. And Gabriela, what do you think? Can we have a perfect taxation system? What are your thoughts?
I think, we should definitely strive to that.
Right.
And in my opinion, there are 5 characteristics that one should strive for. First, fairness. Second, adequacy, meaning that you're collecting enough in order to actually finance development, finance the goods and services that people need. Simplicity, meaning that it's easy to understand, easy to fill out, easy to actually pay the taxes. Transparency, meaning that everybody understands what the system is and how the resources are used, and both taxpayers and also the government itself can look up very quickly, very easily to see what was collected and how it was used. And then finally, ease of administration, meaning it's easy for the tax collector and the taxpayer to actually go and pay taxes. On the fairness question, which is where I spend most of my time on, I think on fairness or equity, there are 2 dimensions. First, you want to make sure that people who make about the same amount of money are paying about the same amount of tax.
Sure.
We refer to that as horizontal equity. But also what Oyebola mentioned, that people who are richer are paying at least as much in proportion to their income as those who have less money. So some form of vertical equity makes sense. And so actually, all of those characteristics are often at odds with each other. Because if you want to make a system more fair, you may want to tweak things and give special care to certain more vulnerable groups, and that makes the system more complex. It makes your revenue a little lower because you're not collecting as much as you possibly could. And so those objectives are at odds, and getting that perfect balance is what's really difficult.
Absolutely. And to continue off of this a little bit, Gabriela, you've been doing some work on the distributional impact of taxes. So can you tell us a little bit more about that, and what are some of the pieces of evidence that you've come across so far?
Yeah, so we've been using a lot of household survey data along with very detailed look at countries' tax rules and legislation. And we've been assessing who are the taxpayers, who bears the burden of taxes, but also who benefits from the spending. And on this tax side, what we've found is that direct taxes, such as the personal income tax, for example, is typically very progressive and reduces inequality. On indirect taxes, on the other hand, such as a value-added tax or an excise tax, often are regressive and sometimes can even increase poverty. I think the most important part of the work, though, is that looking at just taxes by themselves is not enough. You have to look at both taxes and spending and understand how together they affect the well-being of citizens. You could potentially have a system in which you have a very regressive tax, which collects a lot of money which is then used to finance something that is very poverty reducing and inequality enhancing. And so the net effect, the overall effect, is actually very positive. So just looking at the tax by itself is not enough.
Right.
And I think while that theoretically can happen, you really have to do the hard work of looking at the evidence, country by country, and actually looking to see what's actually happening in a country. And I think that's something that we can do frequently. Every country can do regularly, and it can be part of the type of evidence that can inform policy making.
Absolutely. And let's talk about tax compliance. What do you both see as some of the constraints when it comes to this? I mean, what are the big challenges?
So I would say that's some of the points we've started to mention already about,
Right.
There's this idea of tax morale. That's people's intrinsic willingness to pay taxes. And if some of these things are missing, trust in governments, there's not tax benefit linkages, those could be lower. I think a big part of the tax compliance literature is really understanding what is the acknowledgement that enforcement is always going to be a key pillar in it.
Yeah.
And so even in the best systems where people have been used to paying taxes for decades, if they all of a sudden realize that no one is going to notice if I don't pay, probably they'll stop paying. And so keeping systems where there is enough enforcement in there for people to just continue to comply, I feel like that's a good equilibrium. And so some of the work that I've been doing has been trying to look in systems that have very low levels of compliance. And so that's one of the things I've been thinking a lot about, is that how do you bring people from a very minimal, so I work in Liberia where, about maybe 5% of people pay the property tax.
Sure.
And the reason is because one of the reasons is because no one ever told them to pay. As a tax authority, it's completely reasonable that I would go after the highest property valued, people with the highest property values. And so if normal people feel no sense that this is an expectation and something will happen if I do not pay, then they tend not to. And so I would say that that's kind of one of the big things. It's just that this is, tax authorities definitely have to continue that role of providing the actual type of enforcement that will make people continue to pay. But that's in addition to all these other things we've said about making it easy for people to pay, making it, letting them see where the taxes are going, fairness. That's a huge thing, feeling that I'm being treated as the next person next to me. So all these things together, reciprocity and trust with the government, I think are the things that really could change the compliance environment in this society.
Of course. And what are your thoughts, Gabriella, on this?
I think one of the main indicators of how well you're doing is whether the cost of enforcement is actually less than what you're able to collect.
Sure.
Right. So the cost of compliance, it can't be the case that you're auditing every single taxpayer. So I think one thing that tax administration systems typically do is they will have a risk assessment and sort of organize audits around what riskiest behavior, or having some information that allows them to figure out where there are risks to compliance and where sort of their biggest bang for their buck is in terms of going after potential evaders. And I guess this is often why in some cases they have large taxpayer units, for example. It's not just a question of collecting revenue, it's also a question in terms of equity. Because it can't be the case that the very wealthy end up getting off without paying taxes. On the other hand, it's also true that in many societies, the top of the distribution feels like they're the only ones paying taxes. So that can't be the case. And sort of having this culture of tax payment across as broad as possible, I think is the ideal. Getting there is where it's the struggle.
Of course.
And it has to come back to trust. Trust in government, trust that people contribute, whether it's a little bit or a lot. that their taxes, their effort is going into something that is building a better country, a better future.
Absolutely. And Arbella, I do want to ask you, because you're doing some work on the role, or with the role of technology. So, and the role of technology in administering taxes. And with doing that, what are some of the early results you've seen?
Yes, so we've been doing this work on the impact of electronic tax filing. So this is people submitting their tax returns online instead of in person to a tax official. And it's been based in Tajikistan. And some of the things that we've been finding, so there are two main interesting results. One is that we look at what is the impact on people's compliance costs. And so the methodology we have is a randomized controlled trial where we have a group of people that we incentivize to start using the e-filing, and then another group that we don't, and we look at the difference across those two groups. And we find that among those that start e-filing, there's a big drop in their compliance costs. So before, they would spend like a whole day or all afternoon in the tax office, submitting, getting signatures, all of that. And now they no longer have to do that. So people save about 5 hours every month on tax payments, on the procedures of paying their taxes. The second result is on what actually happens to the amounts of taxes that they pay. And there we find a very interesting pattern. There are two groups that we break the sample into using this risk profile that Gabriela was referring to. So there are people that the government has identified as being more risky or more likely to be evading taxes. And so among that group, we find that the e-filing increases the taxes that they pay. And we did a bunch of interviews to understand why this might be happening. And it seemed that one possible reason is that they might have been receiving some kind of support from the tax official that was in charge of them to minimize the liabilities that they submitted. And so once you start e-filing, you no longer have that face-to-face negotiation opportunity, and so then they start paying more taxes. Among the other group, we find the opposite pattern. So this group now is paying less. They were originally classified as being less risky and less likely to be evading, but once they start e-filing, they pay less. And it seems that among this group, the official was actually serving a role as monitoring them. So if I came to submit to you and something didn't look right, there was that extra level of scrutiny. And so once that is gone, they start declaring less. And so one interesting thing we find is that e-filing seems to be increasing the horizontal equity among this group of firms, because we find that some group that was paid less before, now they've paying more. The other group that was paying more, they're paying less. And so now they're actually paying the same on average. And so that's one, unanticipated result that we found was that electronic tax filing actually could be increasing the horizontal equity.
Wonderful. Well, guys, you've heard it here. We have really unpacked a somewhat dense topic, taxes, a lot of challenges, but I want to, really thank you both, Arbella and Gabriela, for joining me this hour to talk about the challenges, but also the things that we can still do today. So thank you both so much for joining me. And guys, don't go anywhere, because it's actually time for a quick lesson. Did you know that the World Bank Group is actually made up of 5 separate entities? We've got the International Bank for Reconstruction and Development, that's one, the International Development Association, the International Finance Corporation, the International Center for the Settlement of Investment Disputes, and last but not least, we've got MIGA, which is the Multilateral Investment Guarantee Agency. And here's a quick video to learn more.
Okay, work with me here. Ending extreme poverty worldwide will take some $4 trillion a year. Development aid is only $330 million. Another $1 trillion comes from remittances, philanthropy, and some other sources. So we're short. About $3 trillion a year short. Seems like a really big problem. Developing countries are a $12 trillion market opportunity. Opportunities in everything, actually. Hey, challenge. Just found your opportunity. So besides investors, who would it help? These people, to live a healthy life. This man in getting a good income, or give this woman a chance to create something incredible. And everyone else in developing and developed countries alike. It's not just about getting private sector money into development. It's a process about when to use it, when to use public money, insurance, guarantees, or some combination that best fits. Not to replace development aid, but complement it. The World Bank Group and other development banks have the expertise to help private finance tap into developing markets, not just to invest in infrastructure projects, but in people. We call it maximizing finance for development. A little wonky, we know. And while developing countries are doing their part, it's just not going to be enough. That's why we need to rethink financing development, so this little one has a healthy life. And this woman can disrupt an industry with her product idea. And this youth, her big idea can change the world. In the end, we get strong markets and strong communities. And all of us get a world of opportunities. To learn more, check us out online.
Hey guys, welcome back, and we hope that video was a good teaser of what's to come in this last segment. I am delighted to be joined with my next and last guest for the hour, Moritz Nebe from MIGA. Moritz, welcome.
Thank you.
So tell us, what is MIGA? What does it stand for? What does it do?
I will. MIGA stands for Multilateral Investment Guarantee Agency. Also a bit of a wonky name, but yeah. It pretty much does what it says on the label. We provide political risk insurance for foreign investors, for investments in developing countries. So really the aim of MIGA is to stimulate the private sector by bringing investors into developing countries to essentially pull off developmentally impactful private sector projects. That's what MIGA essentially does. More specifically, the risks which we provide insurance against is a suite of political risks. So we look at insurance against transfer restrictions and inconvertibility of local currency, for example. We look at insurance against the risk of expropriation. We provide insurance against war, civil disturbance, and terrorism, as well as insurance against breach of contract by a government or a government agency, which the foreign investor contracts with. In the context of the project. Okay. In addition to that, we also provide a credit enhancement product, which is a full-fledged guarantee for or against the non-honoring of sovereign obligations or the obligations of sub-sovereigns or state-owned enterprises. Okay. So those are the risks we essentially provide insurance against. We don't do that necessarily for each and every project that we come across, but we test it for their developmental impact. Development impact, as we understand it, can come in many guises. It can just be the increased economic activity in the host country, just through increased output, for example. It can also be the indirect stimulation of economic activity through the provision of crucial infrastructure projects in power generation, for example, but also in logistics, in roads, ports, airports. Right. It could be in connectivity, telecommunications, etc. Any sectors that are really identified as bottlenecks to the development of the private sector in the host countries that we operate in. Our strategy is quite aligned to sort of our strategic focuses is quite aligned to achieving these impacts. So we have a particular focus on the poorest countries, the lowest income countries, IDA countries, as well as fragile and conflict affected states. And in addition to that, we have a strong focus on climate change projects. We have a target of 28% of new guarantees to be climate change beneficial, essentially.
Right. And guarantees, you bring it up, so let's talk about that. What is the importance of guarantees when it comes to development?
So it comes into play really at various stages of a long-term investment project. I think there's a fundamental discrepancy between the need of a foreign investor to commit substantial amounts of capital for a very long period of time, on the one hand, and on the other hand, just having a very short planning horizon, in particular in sort of fragile environments, in politically charged environments.
Right.
And the MIGA guarantee can really create a win set here, which otherwise wouldn't exist, by providing the investor with the certainty that the political risks they're exposed to can be mitigated and addressed. Private investors are typically very good in assessing and managing the commercial risks of their projects. That's their daily bread and butter. That's what they do every day, and they've done it many times before. But when they come to operate in a somewhat difficult environment in a new country for the first time, they may not necessarily have the tools or the expertise to assess the risks and to mitigate or manage them. So here MIGA can really create that win set for an investor to really take that investment decision. Now, it doesn't stop there. MIGA remains involved in the project throughout its life. A MIGA guarantee comes with substantial conditionality, in particular where it comes to environmental and social performance standards. MIGA follows up on those continuously throughout the life of the guarantee. If there's issues around that, MIGA can work together with the investor to put in place remediation plans and to bring performance in line with performance standards back on track. Finally, I would like to emphasize the situation if a project overall really runs into difficulties from political risk perspective. This is where obviously MIGA, in the extreme case, provides that backstop and that certainty to the investor. If it goes completely wrong, then obviously MIGA would pay out under the guarantees to the extent that we insured against them. But before it gets to that stage, MIGA actually has a lot of ability to convene the investor and the host government, for example, in a investment conflict, to try and mediate and find a mutually agreeable, amicable solution to a problem that arises. And MIGA has a very strong track record of actually achieving that and containing problems before they blow out of proportion. So that's really kind of the MIGA additionality here.
Yeah. Well, this is an Econothon, so I've got to ask, what is the economics behind guarantees?
So the economics of guarantees, political risk insurance, are quite straightforward, actually. The investor pays a premium, a risk-based premium, in line with sort of market pricing. So the investor has a degree of control over that. It depends whether an investor wants to insure against all the risks that we provide insurance against, or only certain risks. So, for example, if the concern is really in particular around expropriation or around breach of contract, the investor can choose to limit the guarantees to that, and then hence pay a lesser premium. But generally speaking, it's a risk-based premium. In return, the investor gets these two things I described. So one, the certainty of compensation if things really run into trouble and cannot be resolved. But and many investors tell us, more importantly, MIGA comes to the table to provide that convening capacity and mediate between the foreign investor and the host government to the extent that there are conflicts. It can take various shapes and forms. It can sort of in the more acrimonious situations, really MIGA's involvement can be a deterrence. But in most cases, it's more really of an honest broker type role that the MIGA plays in terms of bringing the parties together.
Absolutely. Now, I do want to ask, so, you've spoken a little bit about the environments MIGA works in, whether it's a fragile setting or a politically charged environment. How often do the risks pay off?
So the actual situation where MIGA needs to pay under a guarantee is actually quite rare. It's most often it occurs in sort of the category of war, civil disturbance, terrorism, because those are risks. Once they have occurred, the damage has been done.
Of course.
There's very little that can be done. The risks where MIGA has the ability to actually intervene before problems escalate, it's quite rare for MIGA to ever pay out under those type of guarantees, because our ability to actually find mutually agreeable solutions is really proven.
Of course. And what would you want people to take away about MIGA and what it does? Because it is one of the 5 entities that make up the World Bank Group. So, how would you, I guess, condense that? What would you say to say, okay, this is what we do at MIGA, and this is why it's important?
Yeah, I think probably two things. One is really the focus on private sector development. Our clients, guarantee holders, are private sector entities.
Sure.
And in particular, in sort of the most challenged environments, that is very impactful to the extent that the project and economic development can occur without creating a liability or a contingent liability for the host government's sovereign budget. I think in days as of today, with concerns around the increased risk of debt distress in many poor countries, that is actually a really strong proposition that MIGA brings. And looking at our existing portfolio, MIGA has been able to support projects and help bring projects to fruition in very difficult situations and circumstances where many people would probably think that's not really what I expected for the private sector, the cross-border investments to really go into these type of places. But it does happen, and where we can play a role and facilitate that, and sometimes really be the difference between a project happening or not happening. That's something we're very pleased about where it does occur.
Absolutely. So, we've just got about a minute left. So I want to ask you, overall, how easy would you say it is for you to explain to others the work of what you do at MIGA?
It's relatively straightforward, I would say. Our mission is very focused. Our projects are very focused. So in that regard, I think MIGA is an animal that's quite easily understood once you've gotten to terms with the terminology and sort of the acronyms and everything that's hidden behind. But as I said earlier on, we do pretty much what's written on our label, so that helps, I think, in terms of explaining MIGA. And I think over the last couple of years, as an organization, we've actually made quite good headway within the wider World Bank Group, certainly, but also beyond. And the MIGA brand has certainly developed a lot.
Absolutely. Well, guys, with that, thank you so much, Moritz, for joining me. I hope you learned a lot more about MIGA. It's more than an acronym. It's a Multilateral Investment Guarantee Agency. And I want to thank you so much for joining me and telling us more about what MIGA does. And with that, folks, that is it from us here in Washington, D.C. But don't go anywhere. Econothon continues. I'm going to be throwing it over to my colleagues in the East Asia Pacific region in just a minute. Thanks so much for joining me.